morning, good morning, good morning, good morning, everybody, and welcome to Hump Day, October 15th, the middle of OPEX week. It is just coming on 6 a.m. over there on the East Coast, and welcome to some Overbought setups coming into your opening bell. The Dow futures are not yet to yesterday's highs. However, the NQ and the ES have not only taken theirs out, but the Russell 2000 is putting in new all-time highs as the dogs are barking and the soybean oil is cooking. So let's get on with this because it is not going to be a long video. Yesterday, your email, October, the perfect dip, Tuesday, October 14th awareness, and you got your nice little chilled and relaxed ability to play there on Monday. Yesterday, a little bit easier, but again, because these are volatile times, it's not going to be as easy as it used to be where you could just put something in the email and it was going to be there, 4 hours later. This is real time. So, as I had shared with you already over there, lights out are in progress, 6:31 a.m., 6:38 p.m., 3 hours before the opening bell. 65.95, 6,600, bullish put credit spread. I fucking did it. I did it on the weekend, but I did it yesterday, and it was actually actionable. A put credit spread. $3.350 minimum, 65.88 being your minus 1% pivot. Jerome Powell's at 12.20 today. Zero need to jump on this trade right now. And then as I saw things starting to get a nice little bit juicier right there at 7 a.m., I said, go ahead, you can start now. 10.38, we were already at 66.20. So there's your scalp out place. Bulls have possession. Bulls do not have the VIX. Powell's in an hour. The magnet is the 20-day moving average. Call credit spread risk is after Powell. Automatic pivot is the 20-day moving average for where your risk begins. We're stuck on the Epstein files at 66.40. Completely filled the gap, and the 20-day moving average is still sitting there at 66.70. Got you set up here at 12.20. Patience, 66.75, 66.70. That's what we're looking at. 10-day moving average just up above there. 20-day moving average, your power pivot. You're already 100 points off the lows. And then, boom, here you go. You're getting there. 666.89. Weekly candle is still the same. Safe searchers, focus on that 66.95. And here we go. Bang. Nailed it. Nailed the 20-day moving average. 66.75, 66.70, $3 for everybody who wants to play it. And then you started getting, oh, shit, because we're going sideways. Oh, shit. And here we go, still getting a little dip, a little bit of a dip. 66.75, 66.70 right there, $1.50. Like I was saying, 6666 goes to 6660. Gun to my head, you're going to get full credit. And then boom. And how did you get your boom? Well, it wasn't me that did your boom. It was him. Donald Trump comes out there with your China purposely not buying our soybeans and causing difficulty for our soybean farmers is an economically hostile act. And it was all because Barron had gotten short again. So regardless, the most significant and the most important part I can discuss with you about this is we closed red for the month. We closed below 6664.92. This is going to be that area, your 6688.46, close on September 30th, your 6664.92, your open on October 1. That's going to be your gray zone. That's your gray zone where you do not want to enter into that twilight zone. You don't. But doesn't matter because you got your $3 full credit on your 66.75, 70 call credit spread. You got your full credit on your 65.95, 6600 put credit spread. You got your minus 1% day. So automatically one would start assuming that you are going to 67.1075. However, while this is possible, I caution you on this risk only because you've already had a much better than, number one, plus 1% off of the lows yesterday, and number two, you are entering into extreme overbought on your futures. Now, yes, the bulls can take over, and yes, the bulls can start taking control, but be very, very careful about how you tread on thinking the dip is completely over, and now we start progressing for SPX 7200. Be very careful about that assumption. So I'm going to bring you onto the charts real quick here and show you. Boom. Bulls first warning, 67.15. Is it possible? Yes, absolutely. That would be your 76.4 retracement from the bottom. It doesn't necessarily fit into anything absolutely perfect. However, it would be very, very possible to get up there to that 67.15. Your bulls start worrying pivot right there at 67.05. Again, very, very possible. 20-day moving average continues to be what it is, and your bears do not start winning until you are below 66.27. The bears do not have any control until you are below 65.51. So you are in a gray zone. And what everybody would want to point out and chart on this is, oh, look, we're going to 67.52. There's no question. We're going to 67.52. Once again, I caution you on that. And let me make sure I'm going in the right direction, which I believe that I am. I am. What I have for you on your screen here is what I shared for you before, which is your 2018 SPX. After we had the sell-off in January, 9 days, 9 trading sessions, minus 12%. And then we grinded on up to the upside, wedged right into the perfect bear market extension that we had there up at 29.40 or 29.31. Apologize. We made it to 29.40 in September. Came back, double topped it right at the very beginning of October. And in October began our decline. Now, in the middle of October, right in there on OPEX week, October 11th, we bottomed. Then we came up and we bounced and we hit our, B wave for that move to the downside right on October 17th. And then as we progressed into October 29th, the end of the month, we completed our first wave down for the A wave. I caution you as far as assuming that this is the play. I caution you for thinking that the bottom is in and playing to the upside. Simply looking at this as a bigger, broader, wider picture, like I shared many times before already, that this does fit. It doesn't fit from a CPA point of view, but it does fit. So be careful. October 29th, October 31, those are still many weeks away after the FOMC meeting and after big tech reports. All that matters for you right now is what you're looking at from a zoomed in point of view right here, which right over here at September 23, you've got your 66.99.52 top. So absolutely, that is an absolute marker. Right over here you have your lows right there at 66.99. Absolutely, it is an absolute marker. But this is your wider view just looking back at 30 days, how you've had a minus 3% dip. You're building yourself into a wedge right here. Very, you know what, I'll even draw it right here for you just so that you can see it on your own. Be careful. Be careful. Be careful, be careful, be careful, be careful. IWM, 2, not 1, 2 gaps to fill for the weekend. Oh my God, we're up in the 250s. Oh my God. So yeah, we're up here in the 250s over on the IWM. Your gap to fill is at 247.90 for the overnight. We've already extended through that 248.36 in your email yesterday, which was my trigger from my decision for what I wanted. And your gap from over here over the weekend is still going to be sitting there at 240.36 to 237.79. still the same gap. Over on the Dow Jones, you don't have the Dow Jones. Dow Jones is not Dow Jonesing for you. And over here on your QQQ, well, sorry, we're on the VIX. Here we are on the VIX, and we're obviously looking at a 15-minute chart, so you can see a bigger, broader, wider view of it. You've got a gap above to be filled, which, again, caution you, thinking that that gap will be filled because of how I have already explained the significance of 2102. Your 200-day moving average is moving up now, up around 1927. So you're going to continue to be focused and determined on that 1912 pivot that it has to hold. Bulls will start to begin to take control once we start losing 19 on the VIX. Over here on the QQQ, once again, nothing whatsoever that has changed. Here you have your look as your drop down to 582. Your drop down yesterday right to that 590 pivot so perfectly, and your grind to the upside, which a blind eye would be able to see, an A, a B, and a C move to the upside here, right to the 603.83, 603.59, 50% above the April lows. Nothing whatsoever has changed other than the fact that we've created a brand new gap that fills at 598. So that's what I got for you. What I am offering, what I should have started the video out with, which some are going to be asking, saying, well, where is this? I've watched all this shit. This guy's talking. I don't know what the fuck he's saying. I don't understand any of these trades. It doesn't make any sense to me. So I'm giving away a free membership. I'm giving it away, and it's going to be given away. Where are we? We are here. It's going to be given away based on who is the one after, Taiwan Semiconductor reports earnings tomorrow. Who is the one that can pick the next 3 days? Today, Wednesday, tomorrow, Thursday, and Friday. Wednesday, Thursday, and Friday. Who is the one who can pick AI Bingo, the Open AI Bingo card? Pick your slots, pick your names, send me your 3 tickers, and whoever can get those 3 tickers correctly, I will give away a free membership. Until then, it's going to be lights out because like you saw yesterday, Walmart suddenly decided to do an agreement, PR bingo with OpenAI, and they got a huge spike up for 5 points, up 5% on the day because OpenAI bingo, that's the game to play. So whoever's on it, free membership. I will sign you up to Narcotics Anonymous. No charge whatsoever, because you are an absolute drug addict if you are chasing these OpenAI names. Have a good morning.
So I was right.